Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal. It's the weekend, and like every weekend, we are here to discuss what's happened on Nifty, Bank Nifty, other sectoral indices, look at their intersector momentum moves over the last couple of weeks. And I also have some stock analysis requests that I'm going to respond to. Now, in addition to all of that, I'm going to show you a very interesting feature on TradingView, which can help you become a good technical analyst if that is what you aspire to do. So let's get started with today's analysis of Nifty, starting with the 3-minute time frame. All right, let's go full screen and just make sure you're on the right chart. All right. Now, going to the 3-minute time frame, why I want to start with this time frame is very simple. I want to see what has happened on a micro level over the last week in the chart of Nifty. Okay. So this is the Monday's activity, and we can see starting Monday all the way to the end of the week. So this was a truncated week on the account of Guru Nanak Jayanti. And we can see over the 4 days, we've seen a significant amount of decline in the price activity. This was quite different from the previous week's activity where we did see a little bit of an upside. Correct. So let's mark our RSI ranges and see if it has any signals for us at this stage. So here we can see that even though Nifty had created almost a similar kind of flow, uh, uh, there was clearly a positive divergence here, especially if you compare this low, right, or even this low and this low. So I'm going to draw vertical lines so you can see what I'm actually capturing here. Between this low and then this one at 40, this one here, or even the previous one here, right, you can clearly see the price here has forged a very evident lower low and the RSI has forged a higher high. This was done, and then we can see that the RSI here has sustained above the level of 60 for quite a while, showing a positive range. What happened after this? This sharp decline, which was on the 7th of November, that is Thursday. Now, this sharp decline did something that was a harbinger of bad news, because here we can see that the level of 30 got breached on the 3-minute time frame, which was an indication that this weakness is going to sustain. Another indication came when the price tried to bounce up slightly and then resisted. The RSI 25 period resisted the level of 60 not once but twice, right? So this is basically a negative range shift where the RSI initially was respecting the level of 40-ish and going above the level of 60. Now it started resisting the level of 60 and started breaching below the level of 30, right? So 60 to 30 minus and 40 to 70 plus are the ranges that we talk for, or we look out for bear range versus bull range, right? So here we would say there was a slight attempt at recovering, but the attempt absolutely failed. And what we see here is that the price has again gone down. Now, the recent activity, this week's activity, if you see, there is something confusing. You know why? Because every time the RSI is trying to come up, it's resisting 60, but also when it goes down, it is also taking support at the level of 30. This is very interesting. Why? Because despite of the strong decline in price, clearly there is something about the green candles which indicate that there is some underlying strength. So the buyers are trying to exert some buying pressure, or they are trying to make a comeback, but not enough strength yet, which is okay. It can catch up, right? Now, why I would say that, because the level of 23,500 has also been tested by the index on 2 days, the last two trading days. And in my opinion, the 23,500 is a pretty important support. Going to the 15-minute time frame, what do we have here? On the 15-minute time frame, this is very important to me, this indication. So what does this indicate? That the level of 60 was breached by the RSI, which means that this upside that we saw, it had metal in it. Okay. And this is the strongest upside that we have seen since the entire decline started back in 27 back on 27th of September 24, right? So this is when the market basically topped out around 26,250. Since this decline started, this has been the strongest upside. Even though this low has been breached, yet I would say this 23,500 support level is acting very important, acting as a very important level. Also, if you notice, there are these two trend lines here, number 1 and number 2, right? Why are they important? I'll show you that in a second. Taking a very close look at the RSI of the 15-minute time frame, if you are with me, if you've been seeing my content, you probably know what I'm going to talk about next. There is a RSI positive divergence right here. So I'm going to, for those who are new to the concept of RSI and divergences, I'm going to draw the vertical lines, an exercise which you should also perform if you want to train your eyes in spotting RSI positive divergence. So between these two vertical lines, you can see one vertical line marks the lowest point on the RSI. Another vertical line marks the lowest point on the price, right? So I'm going to circle that. So the first vertical should mark the lowest point on the RSI, and the second vertical should mark the lowest point on the price. Now, between these two, you're going to draw another line joining the points on price that intersect with the vertical line and joining the points that intersect with the RSI. And you can see the lines that join the points on RSI is tilting upward. The line that join the points on price is tilting downward. So this is a lower low on the price and a higher low on the RSI, which basically means that you have a RSI positive divergence. So RSI making a higher low versus price making a lower low is what a positive divergence is all about. Right? So I like my positive divergence marked only on the RSI because I don't want to mess up my price chart. So we have a positive divergence here. Even though the price of Nifty has not established a higher high yet. Yet, if you look at the RSI has already established a higher high. Right? Now, this is an observation which I've been making of late. I'm still trying to establish whether it's materialistic or not. I do have a theory that does counter it, which, if you notice over here, I'm going to be able to look. So this is the counter to my own observation, actually. So here there is a positive divergence, again, as you can see, is marked. The RSI did create a higher high way before the price did, and price actually ended up not creating a higher high here. In this situation, what had happened was that RSI created higher high, went up, tested the level of 60 and continued to decline here. So essentially, once the RSI established a higher high, if I were to make a position in this underlying, I don't trade futures and options, but say if this were a stock and if I were to make a position, right, my stop loss would have been pretty tight here. My stop loss would not have been more than the most recent price low, protecting my capital, right? And especially once the level of 60 would have been touched on the RSI, I would have been very, very cautious of tightening my stop loss further because the probability of the price continuing correction would have been pretty high. But anyways, we are digressing. Let's go back to the RSI analysis or the Nifty 15-minute chart analysis. So there is a positive divergence for sure. What I want to do and what I have done is I have set this alert now on the level of 60 on the RSI 15-minute time frame. I do expect a small relief rally here. The trend line would act as a immediate resistance as long as 23,500 is not breached. Yes, for everything I say, there's always going to be an invalidating criteria present there because there's no guarantee to anything in the market, right? So 23,900 is an important resistance level that you want to look out for if we see a rally bounce back here, right? When 23,900 as a support was touched, immediately after that, my resistance was 24,600, which is what Nifty tested, and it went back down. So we can expect another rally there. Now, whether this is going to be the beginning of a fresh bull market or whether this is going to be a relief rally from the from the correction that we've been seeing, that is something that time will tell. For now, let's move on to the 75-minute time frame. Now, what I'm seeing on the 75-minute time frame is clearly looking at the momentum. We are in a bear range. This bear range that we are in is a pretty dominating one. If I squeeze out and if I show you, we have not seen such a strong bear range on the 75-minute time frame in a very, very long time in Nifty. Not as far as the chart is covering, which is all the way back to 8th of February 2023. Right? And see, this is also one reason why I say that when it comes to macroeconomic information, you don't want to give it a lot of weightage, because here a 50 basis point cut was announced, but soon after that the market actually went into correction. I would say this entire rally that we saw after the BPA 50 BPA cut was actually a euphoria rally. This rally should not have happened, and it is this rally that specifically caught a lot of retail traders off guard. Right, it attracted a lot of retail trader money, and now all those people who have invested right in the near the top between 20th September to 27th September week, they are unfortunately stuck right at the top, especially in the PSC stocks. Right. Anyways, looking at the 75-minute time frame in more details, what I'm seeing is that in the initial part of the correction, whenever the price was declining, the RSI of the 75 was breaching the level of 30 consistently, which was a signal that any bounce back that followed was temporary. Right? This has happened twice, and we can see that RSI created resistance, tested the resistance, and then continued to decline. This has already happened with us twice. Now, however, if you see, Nifty has created a lower price point, but the RSI on the 75-minute time frame is above the level of 30. This is positive. Okay, this is definitely positive. 23,500 support, RSI positive divergence on 15 minutes, 75-minute respecting the level of 30. All of these are positive for the market, right? If 23,500 breaks, then what? Then I believe the 250 EMA of the daily time frame is going to act as support, which coincides with the level of 23,150. Now, talking about the trend lines that I have on the chart, you can see that this trend line that I was just saying is pretty important. It's important because it has acted as support during two other major corrections in the market. One was the end of October 23, after which we saw beautiful Diwali rally begin. And prior to that was 23rd of March 23. Right? So these are the two times when it has acted as pretty good support, and again, it has potential to act as pretty good support for the index. Now, remember one thing very common, one thing that has repeated in numerous times in the past is that no correction in the market is lasting forever, no matter how bad situations look, no matter how negative the news is. The correction is bound to end. And come on, the underlying strength of the Indian market is undeniable. The macroeconomics is undeniable. The latest inflation data also that has come is pretty encouraging. So I strongly believe that we are on the closer end of seeing this correction. We are closer to seeing this correction end than you might credit it. Of course, it's impossible to predict the bottom at the end of the day, but I would strongly recommend you against sitting on cash, because a lot of people believe that it's better to hold cash when the market's in correction and get in when the market rally begins. But the truth is that you will never know when it's the beginning of a rally or it's just a relief amidst correction, right? If you keep that mindset, you're going to keep sitting out of the market and you're going to miss the rally entirely. Once the rally begins, you'll keep waiting for the correction. And that cash of yours is going to go uninvested, ultimately, probably in some bank FD, barely yielding inflation beating returns, right? So what do? Do you buy and forget stocks? No. You need to hold stocks, but you need to manage the risk on that. You need to buy strategically, only where the risk-reward ratio is more than 3. And if your stop loss is getting is coming, whether you're buying for short term or long term, there has to be a limit on how much loss you are okay taking on every single position in the market. Until and unless you have some other reason for very high convictions and you're willing to take huge risk for reasons other than your ignorance, then that's okay. But you need to be very strategic if you're playing in the stock market, right? So that's my analysis for Nifty. Now let's move on to other indices. So this is the list of all the indices that I follow. This contains the list of all the indices sectorally and even other strategic indices. So what I'm going to do is I will copy the link of this index list, and I'm going to share it in my Telegram channel because some of you have been reaching out to me and have been requesting for this list, so you can also do your own analysis. So this is my Telegram channel, Trade with Kavita. Now if you want to join, you can search Trade with Kavita on Telegram and join my channel. It has around 7,800 members, and every day I post these quizzes for you. I share locked messages of stock recommendations which I have studied and think is worthy of your capital. So that's that. So all indices list for TradingView, I am sharing it right here, and this has been shared. Now what I'm going to do is I'm going to copy the post link and I'm going to put it in the comments for you. You're most welcome to click it, join the channel, get this list, and create your own watch list on TradingView using this. Okay, moving on. Coming to Bank Nifty, what are we seeing here? So 52,500 was the resistance that I'd been telling you Bank Nifty has, and as you can see, 52,500 has indeed been tested not once, not twice, but thrice, and we are seeing Bank Nifty decline. Are we going to decline further? The answer is I don't think so. Personal opinion, analysis based. 49,700, I think, is where a strong support stands. And the underlying trend on Bank Nifty is strong. In fact, it's stronger than what seems to be on Nifty. So private banking sector is actually where I'm looking actively for some positions. I think I'm saying this after like a really, really long time. But yes, private banking sector is where I'm looking for active positions. I think ICICI Bank is looking super attractive. Axis Bank, very good. Even IDFC First Bank is something that I'm eyeing, especially for the long term. But not a recommendation, of course, because certain criteria need to be met there. So what I'm going to do is here, I'm going to set an alert at the level of 30. By the way, I have recently found out a very nice little shortcut for setting alerts, and I'm going to show you that. So say you want to set an alert on RSI of Bank Nifty. You're going to click on RSI, make sure that these tiny little blue dots come up, and then you're going to hover wherever you want to set the alert. So say I want to set the alert at 42.73. Now I'm just going to hover on that. I'm not going to right click. I'm not going to do anything complicated. I'll just press Alt A, and then you can see create alert on Bank Nifty has opened, which is talking about my RSI crossing value 42.73. And now I can do all the settings and I can set this alert if I want. I have been using TradingView for, I don't know, more than 5, 6, 7 years now. And I recently discovered this and it's been saving so much time for me. So anyway, that was a little bit of trivia. Now, 49,700 is where I think support is, and I think it's taking the support pretty well. I will, however, wait for a little bit more confirmation because, the 75-minute time frame, even though it has forged a bit of a positive divergence here, it is still in a bear range because it's been resisting the level of 60, right? But if you look at the 15-minute time frame, the 15-minute time frame is already showing a RSI positive divergence, which is good. But like I said, I want a higher high, so I'm going to go ahead and press Alt A. So I need to press on the price chart, which I didn't earlier. So press on the price chart. 50,566 is where the higher high is. I'll set the message HH, which means higher high, and I will set that. So Bank Nifty is done. I'm waiting for the higher high. If you look at the PSU bank again, even there, a positive divergence seems to be forming, not formed, seems to be forming. So I'm going to go ahead and set a higher high alert here as well. There you go. And 75-minute time frame, what does that say? Ooh, the 75-minute time frame has actually established a higher high above this previous high of 6,826. And this seems to be a pullback. So even the PSU banking index has now become pretty attractive in my eyes. And I can see that over the last few corrections, even though the price of the PSU banking sector has been forging lower lows, the RSI has been consistently forming positive divergence here, another one here. Now it has breached above the level of 60, come back to retest the level of 40. This is great, right? This is great. Also, there's a 250 EMA support. Let's look at the broader trend of the CNX PSU banking sector. I kind of want to remove all these old drawings, and I just want to focus on the most recent uptrend. So let's redraw our trend lines just like that. Drawing some internal trend lines there. That seems good. And let's zoom in. So while in the trajectory, there is still another lane left, and whether the banking index is going to come down all the way to check this off or not, we don't know. But it does look like the daily time frames RSI has been in a pretty strong trending bull trend, and it has been coming down to this level of 40 and continuing the rally again. So this sector, the PSU banking sector just became super attractive in my eyes, right? So this is something that I'm going to definitely be paying attention to. So both private and public sector banking, private and public banking sectors have become very attractive in my opinion. Let's move on to pharma, and I'm going to just remove the old drawings. And let's take a look at the daily time frame. Again, the underlying trend of the daily time frame on the daily time frame suggests super bull trend unfolding, intermittent correction amidst intermittent correction unfolding amidst a super bull trend, right? That is very, very evident. I will let the pharma sector correct just a little bit more. I think it still has some downside left. I will wait for it to correct down all the way to this trend line. So this would be, I think, somewhere over here. I actually a little bit more conservative. This is where I'm going to go ahead and set an alert which says lower low, because I want to know if it comes close to the trend line, right? And I'm also going to go ahead and set an alert here which reads higher high, because if it starts going above this green line, which is the 100 EMA of the daily time frame, I want to know. Okay, so I think pharma sector, we are going to pause on that. 15-minute time frame is also suggesting more correction to come, even if it temporarily gives us some higher high formations here. Oh, looks like I've been overusing my alerts. Anyways, I'll figure that out. Yeah, so even if it gives an intermittent rally here, I'm not interested in creating positions in the pharma and the healthcare sector from a short-term perspective. Long-term is a different story though, right? FMCG, I think FMCG you should absolutely not engage in right now. This looks awful. This looks terrible. And I think it is going to stay in correction for a while longer. I have actually been warning against FMCG stocks for a while. Sure, it gave this last leg of rally. But if you notice here, I have marked a small negative divergence. And I also had some of my big clients remove huge stakes in some leading FMCG stocks because this correction that is unfolding right now is not a surprise whatsoever, right? So FMCG to be avoided. Infra. I am not so hot on infra either. I think better part of the rally has been left behind, and this sector is in a major correction. Before I go ahead and touch the infra stocks, even if you look at the major stocks like L&T, they're like really getting a little bit of beating in the market. I'm not comfortable dealing in that. So I'm going to stay away and I will wait for proof of cause. I'm going to wait for establishment of a legitimate higher high on this on the indices before I uh, commit any capital to them at this stage, right? Energy sector, what about the energy sector? I would like to. What about the energy sector? It has completed a pretty strong correction in good faith, but it is not giving me sure short-term positive divergence. But honestly, for sectoral indices, I would prefer positive signals to come up on the 75-minute time frame rather than 15-minute. Uh, I am not seeing anything that compels me to believe there is going to be a strong bull market there. So we are going to move on to the finance sector. Finance sector, just like the banking sector and just like both the private and the public banking sector, I think is gearing for continuation of an uptrend. So banking, private, public, and the finance sector, you want to keep an eye out on these, right? Media sector, really consolidation, lots of frustration here. So we're just going to move on. What about the metal sector? What about the metal sector? A metal sector has actually created this nice little double top formation and is close to support now. The 75-minute time frame is not looking very, very bullish. Maybe a short-term rally, just like the one that we saw here, may be expected, but I wouldn't bet on it, literally. Moving on to the consumption sector, same story as the FMCG, absolutely avoid. Service sector seems to be looking pretty attractive. So service sector is a sector where we can look for potential opportunities. Auto sector has been giving some good indications. Even on the stock specific level, Aisha Motor the other day went up, I think 7-8%. And even Bajaj Auto is actually part of my recommendations for the Trade Together program, right? Because it has some developments, early signs of development, which indicate that there might be some upside there, right? So that's that. Moving on, next we have the IT sector. I think the IT sector is trying to come out of a correction, but I think it can give another leg of correction. So I want to see the IT sector actually test this trend line at least before I go long on it again. So I am avoiding the IT sector for now because I think there's a not I think it's factual that there is a massive negative divergence on the RSI of the daily time frame, 25 period RSI of the daily time frame, and I think it is still getting realized. It's not done correcting. This was the first leg of the correction. I don't think this is the new bull trend. I think this is just a dead cat bounce, you can say. I would expect the correction to continue further. Whew. All right. Now I also want to show you the intersector momentum of these indices, right? We want to discuss that. So I'm just going to stretch this in until there, right? And now you can see from Friday closing onwards, how have all the sectors performed? So here what you're seeing is that the IT sector, which has given a little bit of a rebound during this entire market correction, has actually outperformed the market, relatively speaking, though it has itself also closed in negative since last Friday's closing there. Now we are looking at last Friday's closing. Okay, so since last Friday's closing, I stand corrected. It's actually closed 1.18% higher this week, but that's really not significant, right? All the other sectors, if you see, have performed pretty badly. CNX 500, which we are treating as the benchmark for this intersector comparative analysis, is at -3%, which means that this week has been massive, massive correction. So if you've been using stop losses, you've probably seen a lot of stop loss triggers, right? And it will scare you. It will want to make you leave the market, run away. But a better strategy is not to do any of that. Instead, sit with your trades and see what you could have done better, whether you rushed into making some position, whether there was some confirmation criteria that you could have looked out for, whether there was some better checklist that you could have had which would have stopped you from taking the position, right? If you can just categorize exactly what went wrong or what could have been done better, trust me, it will totally be worth the loss that you might have incurred this week, and continue to use stop losses. Don't abandon that precious little shield on your capital, right? So looking at the sectors otherwise, we can see the PSU bank, metal, and where's Bank Nifty in this list? Bank Nifty is at the top, but PSU Bank has done like pretty bad. In the next 1, 2, 3, 4 weeks, I expect the banking and the finance sector to kind of come up here. Reality sector looked better than the infra. I also expect auto to do better, even though auto was like pretty beaten down this week. I expect the FMCG to continue to decline. I expect consumption sector to continue to decline, consumer durables to probably decline. I'm not so sure about that. I don't know about commodities. I am not outright bullish on energy or pharma or healthcare. So I'm going to keep them like out of my radar, or not going to focus much on them, because for the next at least 1 to 4 weeks, I want to focus on banking and finance more. Yeah, that's that. Okay. So we have request for analysis of two stocks. We are going to move to the stock analysis request section. And let me just tell you that if you also want to submit your stock analysis request, so whenever I make my, whenever I do my next session, if you want me to look at the stocks that you are either holding or considering going long on, all you need to do is visit the link at the top of my head, submit your stock request, make sure that you do all the formalities there. And then when I do my next session, I will respond to your request. As a SEBI registered analyst, it's important that I maintain all records of whatever request I'm doing, whatever stocks I'm talking about in public. So please fill up the form. Makes your and my life easier. When you fill up the form, you will get a detailed video analysis. You'll get an email. You'll get a WhatsApp response from me. It's very structured, right? So it's better to do it that way. Now let's move on and let's look at Reliance, which is the first stock request for the day. We only have two today. So on Reliance, there was like a massive negative divergence on the daily time frame, which was a very strong giveaway July onwards that, we're expecting a correction here. So now what I can see is that the level of 30 has been touched. And why is that significant? Because historically, if you see, it was only during COVID, literally only during the COVID crash, that the level of 30 has been breached. Other than that, the rally in Reliance has been pretty consistent. And every time RSI comes close to the level of 30, it acts as a very good support. And not just the stock, but also the entire market, because of, this being like a major large cap stock, the entire market bounces up. So Nifty is also showing signs of strength, and Reliance is also showing signs of strength. So that's very good, actually. And if I draw this channel, right, if I draw this channel, you can see that this channel has been acting as support. It has acted as support multiple times. And even right now, the stock is pretty close to this level. So over here, there was a little bit of a breach, but other than that, you can see it has acted as support on multiple occasions. We can say anywhere between 3 to 5 occasions in the trend that is unfolding right now, right? So that is where I would expect strong support to come in for Reliance. Um, let's see what your message reads. So you've invested for the medium term and your cost is around 1400. Um, you bought slightly early into the correction. You probably thought the 200 or 250 EMA might be a support. At what price do you want to add more? Hmm. Okay, I do expect it to fall a little bit, but not a lot. So I think you should definitely go ahead and maintain stop loss around the level of 1230, uh, because that is where the trend line would officially get breached. Of course, if it bounces back up, it will warrant for re-entry, but it's still better than continuing to hold, because there could be a possibility that the trend line breaches and that the stock declines really fast, right? Looking at the 75-minute time frame, which is the ideal time frame for your purpose, the midterm analysis, I think a positive divergence has forged, and the stock is trying to maintain positive range. That is, there is enough buying pressure amidst strong selling to actually help the RSI sustain above the level of 30 and even to some extent above the level of 40, right? Even though the price overall has been declining. So, why do positive divergences or positive range shifts form? When the counter pressure is palpable, right? So, here, even though overall the price continues to fall, the positive range shift is indicating that whenever the price is going up, it is doing so with some metal. It is covering some tangible ground, right? That is what it is indicating to us, that there is a possibility that the balancing scales may actually tip over and the bulls may take over from the bears sometime into the future. Obviously, it's not a given reality, it is a possibility, and the probability of that is increasing. That is basically what the positive divergence and the positive range shift are trying to tell us, right? So while your position making has been a little bit premature, in order to do average dollar cost averaging, I would recommend you to wait for further confirmation. I know it is very tempting to add more money to a stock which has declined significantly, especially when you have confirmation biases and when you're looking for external validations, and you're telling yourself, oh, this was a fundamentally very strong stock, nothing can go wrong with this. You end up becoming a long-term investor from being a mid-term or short-term trader in the stock, right? Which is not something you want to do. So in order to safeguard your capital, I would suggest you wait for a higher high, let the stock sustain above 1290 and then check back with me. It would be prudent for you to make a position after confirmation of proper reversal. In fact, yeah, so there's the 500 EMA at the level of 1312. Let the stock sustain above that, and then you go ahead and add more to the position. Until then, whatever capital you have already committed on that for your existing position, maintain stop loss at the level of 1229, right? The stock can take anywhere between, I would say, 3 to 6 months to reclaim the previous high, but considering the trajectory it's at, I would expect around 30% rally from where the stock is at. So a conservative target for your existing holding would be 1650. Unfortunately, the risk reward ratio is not very attractive for you whatsoever, because you've already incurred 10% risk on the position, and the upside from your entry level is barely 15-16% on a conservative side, but that is the reality of things. Moving on to the next request, we have YESBANK. I really don't think YESBANK is a good stock for short-term trading at all. And I can see that you have an average cost which is pretty high around 27. The stock is right now trading at 19. I'm really sorry. Uh, that is that's almost 30% decline in your value. You understand that 30%, allowing your capital to get eroded by 37%, you need to make back 40% to just reach break even, and 40% returns is massive. But anyway, so you want to exit the stock. So I don't think now is a good time to exit immediately. Also on the daily time frame, I'm seeing a small little positive divergence here. I would suggest you continue to hold on to the stock, because you've basically bought into the wrong side of the momentum, and um, the stock has pretty much almost completed the decline. I would say that on the basis of the trajectory that we have here. So if you look at this upward trending trend lines that I've drawn, and the internal trend lines that I've drawn, that together form the trajectory of the prices, the stock has now declined all the way to the very last support trend line. And here the daily time frame has started to form a positive divergence, right? 75-minute time frame also is showing a tiny little positive divergence, which is good indication. So I wouldn't recommend you to do any kind of cost averaging here, unless you bought like a really small quantity. You can allocate as much as a total of 3% of your total short-term trading corpus to the stock, not more than that, because of its very high, very volatile risk profile, very high risk profile. So if you've allocated lower than 3%, then you can go ahead and average the stock after it sustains above the level of 21, right? And again, the holding period I would expect you to have to hold the stock for anywhere between 3 to 6%. And I would give you a target of around 3 to 6 months. You'd expect to hold the stock for 3 to 6 months. And I would give you a target of around 37 rupees on this stock. Now, to coming to the last part of today's video, I want to show you guys a way in which you can actually become a lot better at technical analysis. Now, today I started reading this book, Master of Swing Trader by Alan Farley. And in the very first page of the very first chapter, he has shared how he became good at technical analysis. So back in the days, he would print out charts that he wanted to study. So what he shared in the book is basically, hold on. All right. So, like I was saying, I started reading a book recently by Alan Farley, the master swing trader. And in the very first page of the first chapter, he's referred to how he became or acquired expertise in technical analysis. He would print out charts, stock charts, and then cover the price action with a paper, and using the Bollinger Band indicators plot, he would try to predict the next price movements. Sometimes he'd be clueless about what was gonna happen next. Sometimes he would get it right. All in all, that practice helped him develop an intuition which improved his prediction of next price action, which aided him in becoming a very good swing trader. Personally, in my experience, also, I have done the same. And why I'm telling you this is because now technology has come to our aid and we no longer have to go through the painful process of printing out papers. What we can simply do is use the replay function of TradingView. So I'm going to show you how to use the replay function of TradingView to become a genuinely a better technical analyst for yourself. So for instance, this is your chart, right? Now you want to study the stock. All you're going to do is you're going to click on this button, which says, literally says replay. All right. Now, when you click this bar is going to come and it's going to ask you to select the bar from which you want the prices to replay. So suppose I want to study YESBANK's price action all the way from the beginning of, say, 23, right? So I will click on the select bar and I will select this tiny little bottom, right? So you can see all the price action after that bottom of October 23 is now gone from my charts, right? Here I can set the speed. Either I want 10 candles a second or 7 candles or 5 or 3. I typically like to go with 3 if I'm studying a stock for the first time or just initiating my study. And then I'm going to hit play. Now, as the candlesticks unfold, so will the indicators on the chart, maybe the EMAs, maybe the RSIs, they will unfold. And now you can make an objective analysis. You can train your brain in actually seeing how this is unfolding at a higher speed, and it can help you become lot better with your own decision making. Whenever you want, you're welcome to pause, you're welcome to use further drawings, create notes, and then continue to play again, right? I personally prefer to do this with all the stocks in my watch list, all the stocks that I have taken trades in the past month, in the past 3 months. It helps me retrospectively improve upon my own mistakes as well. And this is a very, very powerful tool. So if you want to become a better technical analyst, if you want to improve your chart reading skills, then this is the replay that you need, not those popular TV shows that you've been wasting hours behind. Sweet. So, with that, we come to the end of today's session. Thank you so much for joining in. I hope you will join my Telegram channel, Trade with Kavita. I'm sharing the link down below in the comments. Also, if you want me to look at stocks for you, then fill up the stock request form. I'm sharing the link for that as well. Do leave a comment and like this session if you've enjoyed all the information that has been shared. I will see you in the next video. Not sure exactly when that's going to come out, but it will be posted about in my Telegram channel. So that's that. Thank you so much for joining in and giving me your time and attention. Namaste.